Okay, let's have a look at what's going on with the markets. It is 8/7 Friday. It's 9:30 at night. I had to go into the city today, so I didn't get back really at all. That I'm just doing this now. So let's look at the little Robinhood account first. So I had sent the $200, and I've already rolled it. So I rolled to the 814 puts for $2. We on MSTU or MSTR had gotten the break of $100 and broke through the $2 area today. It's starting to trend upwards. We have this long-term yellow line here that is carrying the price higher and higher every week. So we should be able to target that puts at $2 and collect that premium for obviously this week and next week and the week after that, potentially, as it starts to push and climb higher. So, we have that to work with, that this is moving up. It's also pushing into that when type of area here, and we still have the when that needs to come together on the weekly, that every week just gets closer, that eventually we'll move right up into that area somewhere around MSTR 162-ish, somewhere in there. When we get there, we'll know exactly what it is, but for now, just call it 160. And on Bitcoin, this kind of took like a downwards move here, kind of separating apart. So this is going to be lower here, somewhere in what is off of this green here? Something like 75,000 on Bitcoin. Either way, on the MSTU, let me get to a smaller time frame. Let me zoom in some. Can I get that on the daily? If I just filter that out and then zoom in here potentially. Okay, so we are at $1.99. We've broken above that $2 area, and those puts expired worthless. So the puts that I had sold last week expired worthless, and will it allow me to see the history of that? Sell, no. Will it let me see the MSTU? Where's the search? Okay, roll. What were those? Okay, that was that. Yeah, so that was the last Friday. I had sold puts last Friday. I sold more than 2 though. Is that because that's 5? I'm a little lost. Where is it? I definitely sold more than 5. Pretty sure. And then I bought back 7. Yeah, I bought back 7 because they basically expired worthless. So I sold... Is it this one? Yeah, it must be. Okay, so I sold them at... What is that? Yeah, how did I buy... How did I buy back 7? If I didn't sell 7, where? It's a 731. Oh, and then they rolled. That makes sense. I rolled them. That makes more sense. So I had 5. I rolled it, and then I sold 2 more, which gets us to 7. So they were 32 cents and 30 cents, and then I bought them back for 3 cents because they were going to expire worthless. But I bought them back so that I could then roll it out. I could roll it out to next Friday. And so I rolled it out to 11 cents, made like 27 cents off of it. 27 cents times 7, or $27 times 7. And so that's how that turned out. And either way, that worked out. So that's that. I moved them to next Friday for 11 cents. And I expect that to expire worthless and collect the 11 cents off of each of these. And I have 8 of them, so it's going to be roughly $88. And currently we are at $16.29, so $88 on $1,600. It's a little less than, how much is that? Where's the calculator? $1,600 times, what is 0.05? $80. So it's a little bit more than 5%. So a 5% gain expected next week, and we'll just continue to do that. Collect 5%, collect 5%, collect 5%. There is something I want to look at. But that's effectively, that's what that is that I'm going to collect 5% every Friday until we move up. And so that basically covers the little Robinhood account. I'm going to move that over here and minimize it. I also changed that to dark mode so that I didn't have to look at how bright it was. But that's a me thing, so it's nothing. I want to look at MST. Where are we at here? Yeah. And then I need to zoom in again because I got lost. Actually, I just want to move to MSTR so that the chart is bigger. And I want to go here. So there's something to consider on the price action that, I'm not saying it will happen. I'm just saying that it's possible to happen. And it requires a little bit of an understanding of MSTR. So I want to go over that actually. I want to talk about that so that the idea is known. So let me Google MicroStrategy really quick. MicroStrategy, yes. Okay. So there's something here that I'm going to reference, and I'm going to say it often enough that I should explain it, that it's called the MNAV. So this is the market net asset value, and this is the price of MSTR compared to the amount of Bitcoin that it owns. And it is currently at 1.07. The 7 here means that MSTR is selling for 7% higher on their stock price than the equivalent value of how much Bitcoin they own. And so this is going to be the MNAV, and this is going to be the premium. The premium right now is 7%. That somebody is paying at $100 on MSTR, 7% more than MSTR is actually technically worth. And so that is the MNAV, the market net asset value. The MNAV here, if we look at the price of Bitcoin on, let's go to a daily chart, and then I'm just going to cut all of this out because we really only need to go back to June. So, oh, that's February. Where is June? I thought it was a gap, but I guess it's not a gap. So we'll go into here. And if we were to look at all of the dates prior to today, where the price was $65,000, we can go back, let's say, to here, and that's going to be July 21st. And it's going to be like the bottom-ish area of the wick on July 21st. And then let's go back to here, the bottom of the wick on June 16th. And sort of the top of the candle body on June 4th. So what is that? The 21st, the 16th, and June 4th. Now if I go to MSTR, and I want to zoom into like roughly here. Actually, I want to get rid of those bars to the right as well. Get like a cleaner chart here to look at. So if we go to, what am I looking at now? No, I want this. Yeah. So if we go to the 21st of July, the MSTR price was 103. If we go to the 16th, at the bottom here, the MSTR price was 122. And if we go to June 4th, the MSTR price was like 120, like 128 or so. So MSTR is coming down, even though the equivalent same price on Bitcoin is 65,000. That is a product of the MNAV. It's a product of the MNAV shrinking. That somebody back 2 months ago was paying or willing to pay a higher premium to own MSTR than they're willing to pay today. That's the long and the short of it. There is that the MNAV is now 107, where the MNAV would have been much higher back at the beginning of June. Now, to understand why the MNAV is shrinking, we kind of have to understand how MicroStrategy works. And I'm kind of saying all this because what it's going to amount to is I need to sell puts and I need to be prepared to sell calls and I need to be prepared to acquire shares at some point so that I can then sell calls. And at any moment, the thesis that I'm going to end up getting to is that at any moment we could return to 140 or what was that on the 4th? We could return to 130 at any given moment, and I have to be prepared for that, which is why I'm selling puts down below, and then if it moves up, I'm prepared to change those to just full-on buying of the MSTU, just buy the shares, own the shares, and then start selling calls. Because at any moment during this and during this coming together of the lines on the daily chart and the weekly chart, we could find ourselves very quickly at $140. And so I mentally want to be prepared for that. And so that's basically what I'm getting at, but I want to explain how strategy works so that you guys would understand the concept of how this is possible. So what strategy does as like their core business function is they buy Bitcoin. Like that's what they do. They buy Bitcoin. When they have MSTR, their company, and their company is selling at a premium, what they do is they issue shares. They basically turn on the money printer the same way that like the Federal Reserve does, and they have an allowance right now of 7% that they can create shares just within their company. They just say, ta-da, there's 1 million shares. Here they are. Like they can just ta-da that like magic because it's their company. The same way that like the Federal Reserve can just say, ta-da, we ran the money printer for an extra hour today. We just printed an additional $1 trillion because we can. And so that's something that like the Fed does when they they evaluate the treasury, and they evaluate the inflation, and they evaluate what the percentage yields are, and then they decide how much or little to run the money printer to flood the market with dollar bills, or stymie the supply of dollar bills to help adjust the yields and the percentages, or it's far more complicated than that, and it's not actually as simple as running the money printer for an extra hour. It has a lot to do with can they sell bonds, and what is the current price that people are willing to buy them for, and so then they just fabricate more bonds, and they just print that out and say, is somebody willing to buy this for $1,000? And somebody says yes, and then when somebody buys it, they just write another one. They just sit down at the desk and say, I owe you $1,000. It's like, essentially that's how it works. But it's far more complicated than that. MSTR is far more simpler. So what MSTR does is they look at their price and they say, okay, right now at $100, Bitcoin is $65,000, but MSTR should not technically be $100. They should be 7% lower if they were at an equivalent value of how much Bitcoin that they own. And so then they issue new shares. They turn on their money printer. They say, ta-da, here's 1 million more shares, and they just sell them on the open market, which lowers the MNAV because those shares were just fabricated from nowhere. And so then they start skimming the premium off of the MNAV down to a 1.0 MNAV. And then over the week, or over a 14-day period or 21 days, they watch their MNAV expand. They watch it grow. They watch people be willing to pay more than $100. And when this gets up to, say, 7 or 8, they fabricate more shares and they just sell them on the open market, which drives the price down, because you just wake up one day and they say, oh, here's suddenly, for no reason, 2 million shares that we just sold at 8:30 at open on Monday morning. And then you see this price go from 100 to 98. They just trimmed off 2% of this, and now the MNAV is at 105, and they have just taken in $200 million. And then they take that $100 or $200 million and they turn around and they buy Bitcoin. Which then offsets the amount of shares that they had just sold, because they're already trading at a premium, which sort of makes it free available money to be skimmed off the top. And so then they just skim it off and they turn that into Bitcoin. And so the money itself doesn't dilute or disappear. It gets turned into additional Bitcoin. And anytime that there is pricing of MSTR above its MNAV, then that is premium available for them to skim off. And so then that's how they generate funds, and they do that every week. It's like a self-fulfilling prophecy and a self-feeding machine. That what happens is, Monday morning they wake up, they have $200 million, they buy Bitcoin. Because they buy Bitcoin, Bitcoin goes up. Bitcoin goes up, MSTR goes up, because MSTR is tied to Bitcoin. And so it just self-feeds itself. But then if they get to like a 1.0 MNAV, then now they are like 1-to-1 ratio tied to the value of Bitcoin, and they realistically can't drop below 1.0, because then they are selling for less than what their total amount of Bitcoin that they own is. And so the floor in theory is 1.0, and anytime there's an additional premium added on that, they skim it off, and then they take that skim that they had and they buy additional Bitcoin, which then raises Bitcoin, which then also then raises MSTR, and so then other people buy MSTR, and it continues to expand the MNAV. And so it just rinse and repeat and rinse and repeat. It's very, very similar to how the Federal Reserve works. A little bit. It's not like 1-to-1 identical, but if you had any understanding of how like the Federal Reserve works and how all of that comes together, then it becomes really easy to understand strategy, because it's like a baby version of that in a publicly traded company. They basically just made their own science fair project version of the Federal Reserve, and then based it off of Bitcoin, where the Federal Reserve used to be based on gold. Now it's not. It's not backed up by gold at all. It's backed by the faith that America will exist tomorrow, and if it exists tomorrow, it can pay its debts tomorrow. And that's really all that it's based on. This is backed by Bitcoin, and then when they buy Bitcoin, Bitcoin goes up because somebody's buying it, and so now it has a higher value. And so it just fulfills its own need to feed itself and continues to rise. While at the same time, other people also buy Bitcoin, which raises the price. And so then that just happens, and it just happens and happens and happens. And as it expands, it raises the price. When they trim it off, it lowers the price. But now they have acquired $200 million off of 2% of this, and then they buy more Bitcoin, which then raises the price. The second one to look at is STRC. This is closer to like a treasury 10-year yield, where you buy the 10-year from the government, and you buy it from them for $1,000, and then like the current yield might be, let's say, 4%. That over 4%, you are expecting a return of 4% over that 10-year time period, and then you get your money back. And so that is like the safe investing in like bonds or something through the U.S. government, where you know that your money's safe and that there's like a set percentage that you will be able to gain from it. And then you just do that for a 10-year set period and say, give me my money back in 10 years plus 4%, and I'll see you down the road. And so that's how like the 10-year would work. How STRC works is that you pay them $100. That's theirs. Like, that's how they offer this. They say, I just fabricated and ta-da'd 1 million shares of STRC, and I'm going to sell them for $100. And so then they just sell it. That $100 goes into STRC's pocket. You don't get that back in 10 years. That is STRC's money. What you get for the opportunity cost of giving them $100 is $10 in return. Actually, it's $12 right now, but it's 12%. 10% is easier math to understand, so I'm just going to keep saying 10% or $10. So what you get back in return is 10% dividend yearly, which means you get $10 from your $100 every year. Now your $100 is gone. That is permanently gone. You don't get that back. You only get it back if you sell your STRC, but you're selling your STRC to like somebody like me or the neighbor or the next guy. You're not actually getting it from Strategy. So from Strategy's perspective, that $100 is gone. You gave them $100 for that share. That share now exists. It is out there in the market, and it doesn't matter if you want your $100 back. You sell that STRC share to someone else through the open market, but that the original $100 is in Strategy's pocket, and it's permanently there. It's gone forever now. So they create shares. They say, we have 1 million shares of STRC for sale, and we sell them for $100. Now they just raised $100 million of capital by issuing 1,000 shares or however many shares of STRC at $100. They raised that capital. They sold it to you for $100. They give you $10 every year as a dividend forever. So to get your $100 back, you have to at least hold STRC for 10 years, which makes it their version of a 10-year yield. But that is solely on the individual who bought STRC, that they need to hold it themselves for 10 years to get their $10 every year just to get to break even $100. On the 11th year, now they're making money. So STRC is a long-term 10-year yield idea that whoever is funding this, whoever looks at STRC and says, I want to buy that, they have a 10-year prospect. They have a time horizon of at minimum 11 years. And on that 11th year mark, they are profiting now 10% every year. So that is how STRC operates. The problem with STRC is that they broke their par. They sell for $100. They haven't been at $100, STRC. They haven't been at $100 since June, which is where all of that cratering started happening, is back in June when Bitcoin cratered, here back in, nope, not that one, here back in June, here, and then MSTR cratered in June. It's been cratering. Like, let's not pretend that this high says 414, but I'm just referencing 2 months ago. So it had dropped off, Bitcoin had dropped off, STRC had dropped off. The problem from the money printer perspective is that STRC is sold by strategy when they turn on the money printer, they sell them for $100. It hasn't been $100 in almost 2 months, so this money printer is broken. It is not working. In order to get this back to $100, strategy has been buying STRC back from the market. This is still a good outcome for them, because all these shares that they buy back, they originally sold for $100. So then when they see this at $71, they already have the $100 bill. They've already put it into Bitcoin. They have that $100. And now they can buy that share that they had sold, let's say a year ago. They can buy all those shares back for $70. They have now gotten their own shares back at a discount by 30%. And so what they've been doing the last 2 months is skimming the MNAV on MSTR to fund the buying of STRC. They haven't been able to buy Bitcoin in a handful of weeks because they need to get STRC back to $100. And it is beneficial to their company to get STRC back to $100, even if it means buying their own shares, because buying their own shares back, even right now, is a discount of 5%. That they sold this for $100 originally, and now they can buy that back for 5% less, which means that they don't have to pay whoever that person is that originally bought it for $100. They're not paying 12% dividend or $10 every year, because that share doesn't exist anymore. They bought it back. So it's a whole rinse and repeat cycle machine that they've created. Now, when STRC gets back to $100, they can go back to selling shares of STRC and collecting $100 bills and taking that $100 bill and buying Bitcoin with it, which then raises the price of Bitcoin and raises the price of MSTR. It does not raise the price of STRC because they want to stay pinned at $100. And so if STRC goes to 101, they sell 1% shares. They just fabricate them, create them, and then sell them of STRC, and they keep this price pinned at $100. Now, to get it back to 100, they have to buy their shares back. When it goes to 101, 102, which it never actually does, like the moment it even starts to creep to $100.01, they start selling shares to keep it pinned. That's how they hold STRC to that $100 mark. But right now they're buying their shares back to try and get it up to 100, but they're still getting their own shares back at a discount by 5%, 10%, 30%, down here at 71.25. That is a 29%, 28.75% discount of the shares that they had originally sold in the first place. So they are technically happy to do this, and to decrease the amount of dividend that is totally owed as a whole to everybody that owns this, and they pay that every 2 weeks. So if they can take some of that off of the ledger, that's beneficial to them, and especially if they can take it at a discount of 5 or 10%. That if they sold $1 billion, which is like pretty much what they've done, they sold $1 billion worth of it, many billions of dollars worth of it. If they can get a 5% discount or a 10% discount off of what they'd originally sold it for, now that is just free money. And so that's like the whole mechanism of how strategy works. And right now they're sitting at a 1.07 MNAV. In order to get STRC back to par, they are going to trim some of this MNAV away, sell shares of MSTR, just fabricate them, create them, turn the money printer on, then issue them onto the market, issue 5% of whatever, however many shares they have or however much value that is, issue it, which drops this to 1.02 MNAV. And then they just sell them. Free money, printed, Monday morning. Sell them, buy shares of, say, $500 million worth back of STRC and continue to raise this price up. So free money is skimmed from the premium, and then free money is created through here. And that free money is then turned into Bitcoin, which offsets what they had sold. However much they had sold turns into Bitcoin, but we can't do that right now because they are trying to get STRC back to par. So they haven't been able to take that money, the money that is supposed to be used to buy Bitcoin, they haven't been able to take it and buy Bitcoin with it because they have had to buy STRC and raise this back to 100, which is still beneficial because they're buying back their shares at a discount of 30%, 25%, 5%. They're buying their shares back at a discount. So that's like the mechanism of how strategy works and how this company works. Understanding that principle, if we look at the MNAV right now, that is the reason why on all of those dates on MSTR, that the June date is not the same. Where is it? The June date, June, here, and then let me expand that upwards and drag. That is the reason why the price on MSTR is not the same from, what did we say, today? I think it was the 16th, maybe the 21st. Yeah, the 21st, the 16th, and June 4th, I believe. That's the reason why the price on MSTR is not the same as it is on those dates when Bitcoin was $65,000 on those dates, is because strategy has been trimming the premium that's available on the MNAV. Now, if STRC gets back to $100, then they don't have to strangle the premium that is expanding on MSTR. They don't have to strangle it as much every single, Wednesday, Thursday, Friday, Monday. They don't have to strangle it, pull out the $250 million or the $500 million and funnel it over to STRC. They're not required to do that. They don't have to get it back to par because now it is getting there on its own. If it is allowed to, if STRC is allowed to get back to par, then they don't have to strangle the MNAV on MSTR in order to fund it, which allows it expansion and allows this to get back to a similar price that it was on June at the equivalent price of Bitcoin 65,000. So that is mostly what we're waiting on, is that Bitcoin is recovering. Bitcoin is getting to, let me zoom in there. So Bitcoin is getting to like stable prices, and I am still waiting for it to like bottom. It's bottomed, like I believe it's bottomed, but I'm waiting for it to bottom and then rebound and go back up. But MSTR has not been able to like get its feet under itself and start growing and expanding because it is getting trimmed and getting those premiums reaped off of it every Monday morning in order to funnel funds into STRC. When that stops, MSTR could very realistically rebound right back to at least 140, overnight. Like it could just happen overnight. That it's something I need to be cautious and aware of if I'm selling puts or if I'm selling calls, is that this thing could just gap up and go and move if strategy wakes up Monday morning and stops trimming that premium off of there. So at any moment, this could just go. And this when lines here, kind of tell me that Bitcoin is prepped to move, MSTR is prepped to move, And the moment that it finds some kind of stability is the moment that strategy says, okay, we see that Bitcoin is stabilized and we don't have to try and keep the boat afloat anymore. We can let this thing start moving, and then this thing just moves, and we could find 140, 150 very, very quickly. So I just need to be aware of that so that I'm prepared to enter and get in and have the shares, and then I can start selling calls. So that was a not entirely accurate, but pretty decent description of how strategy works, and where we could potentially be going very, very quickly, and just something that I need to keep track of and be prepared for so that I can stay ahead of it when I'm selling calls or when I'm selling puts, because the puts will expire worthless. But if this thing disappears and goes on like MSTU, if it disappears from $2 up to $3 or $3.50 or $4, then I am now playing catch up and I need to acquire my shares still. I don't have any of those shares. I sold puts, and congratulations to me, I made 11 cents, but I want to have the shares so that I can move from $2 up to $3 and $3 to $4 and $4 to $5 at some point. And the move, say, from $2 to $5 is 250%. It's a 2.5x move from $2. That's far more than 11 cents, and it's something that I need to be prepared for so that I can be a part of it. So that's that's how that goes. And so yeah, with that, we had I was just buying things on the not having anything to do with the little Robinhood account, but just on my end. I had Amazon and I had Microsoft, and I had sold calls. I sold calls Monday morning. When the market opened, I was able to sell calls for those, and it had gapped up Monday morning. I was able to sell the calls for higher than I expected and get those up and above. The Amazon actually dropped back down, and so Amazon did not expire, or did expire worthless, and they didn't execute. That I still have the Amazon shares, and Monday morning I'll have to sell calls again. I won't be able to roll them. I'll have to sell them because they expired worthless today, so I don't even technically have them anymore. Like I said, I drove to Chicago today. I didn't have a chance to do anything with this, but I was ready to accept the selling of the Amazon shares that I didn't actually care that much. Whether it landed in the money or out of the money didn't really matter that much to me, because if it sold, I just take all of that profit, and that didn't happen. They expired worthless, and so Monday morning I'll have to come back in and sell my Amazon calls. And same thing with Microsoft. I was able to sell calls on Monday, and they expired worthless, and so Monday morning I'll have to deal with that. But that's like a my end thing, and so I probably won't even reference it that much anymore, except that knowing that that's where the funds for me come from for how I buy things like Google. How I buy them every Friday is that the funds are coming from selling calls on Microsoft and Amazon. But that if I'm selling calls on Amazon, I actually am prepared to have those execute and have it sell 100 or 500 or 1,000 shares of Amazon, because I bought all of those shares back here, and so they've already more than almost doubled in value for me. And I can just let them go if they want to go. And we're 2 full standard deviations away. Monday morning when it gapped up, it was 2 standard deviations away. It has come back into not reasonable pricing, but it's not 2 standard deviations away. But Monday morning I'll have to figure out where I want to sell calls at, depending on how it opens. And same with Microsoft. Those expired worthless, and Monday morning I'll take a look at the pricing on my end, and I'll go ahead and sell calls. But that's where the funds come from that buy something like Google. We should look at Tesla. What I do with Amazon and what I do with Microsoft isn't terribly important to anybody else, but we should look at Tesla because this is important to other people. Let me get a drink here. So we did do things with Tesla here. My uncle had sold puts and sold calls on TSLL, so I should actually talk about this. I called him from the truck and talked him through how to navigate this today. So that got taken care of. Like, the things that are important got taken care of, even if I am late and it's 10 o'clock at night on a Friday. The things that were important got taken care of at like 1 o'clock, 2 o'clock today while I was sitting in Wicker Park. So, that got taken care of. But we'll have a look here at Tesla. We have a gap here at, what is that, like 340, just for easy memory, we'll call it 340, and up here at 370. We did climb from last week. I know that I had said we are beyond 2 standard deviations away, and that I would like to see this get back up above 320, I believe. Yeah, I'd like to see it get back up to 320. Not that it will fully recover. Not that it will like V-shaped rebound all the way back and fill the gap off of the earnings, but that I would like to see it at least back into the 320s so that the price itself is healthy, even if Tesla is beat up and down. And so that was the first target area to try and get it recovered back into, was Tesla 320, which I believe on TSLL was $7.50. $7.66. So that was like the first area that we wanted to clear through, at least to find some kind of nice consolidation that is healthy and reasonable for the pricing. So we are now above, I'm just going to keep saying $7.50, but we're now above that, and I could say that $8.11 is relatively healthy and sustainable on TSLL, where this $6.70 is not sustainable because it was an entire 2 standard deviations away from the mean on the Tesla side, that it was just too low. So we've recovered. We're to something that it could just consolidate sideways, and now what I want to do is protect off of that $9 area, that if it starts moving up, it'll try to close that gap, and that gap goes from $9 to $11. It's not like the exact actual prices, but for simplicity's sake, it's $9 and it's $11. It's like 1081 and 909. But yeah, $9 to $11. I want to protect off of that region where the calls that we would be selling, if it gets into that gap, they could immediately go up $2, and then we have to sell our shares, which I don't really want to do. So initially we were selling calls at $8, and I had him sell puts at $7. And then I had him sell puts at $7.50 because the $7 ones had become worthless. As the price moved up, the $7 puts became worthless, so I had him close them and open a $7.50 put. And now the $7.50 put expired worthless today, and so he closed it, and he had $8 calls that he had sold, where I think it was like maybe 800 shares and 8 calls. The details aren't like terribly important. We can just call it 1 so that it's easy. So he had sold 1 call for $8 and sold 1 put for $7. Then we closed the $7 put because it was worthless. We collected maybe like 27 cents or something. Yeah, call it 25 cents. So we collected 25 cents, sold the $7.50 put, sold the $7.50 put for like 15 cents. That also expired worthless. And so now he made 25 cents and he made 15 cents on shares that he had originally paid $8.25 for. But now he has lowered his cost basis somewhere below $8 for sure. Because I don't know the exact pricing, but let's say that he's lowered his cost basis to $7.90. And then he had sold $8 calls, and he sold those for like 20 cents. But he had originally sold the $9 calls immediately after earnings and sold those for, let's say, 20 cents. I don't remember exactly, but basically his cost basis now is somewhere near $7. That whatever he paid for his shares doesn't matter anymore because he's lowered the cost basis of what it really cost him somewhere just below $7. And so now he could, in theory, sell calls anywhere and just collect the premium. But if it executes, then he's just making pure profit of a move from, say, $7 up to $9. That's a $2 profit that he would just take. But he sold calls today for $8.50. That was the new price that I had picked while in the truck, is that we needed to roll the $8 calls he had today out to next Friday, and he rolled them out to $8.50. It's going to be like a premium that we want to attempt to collect somewhere south of $8.50, have it expire worthless. That we got over the $320 mark on Tesla, but that does not mean that it is ready to fully recover, get into that gap fill, and go all the way back to, I think it was 370 maybe. That doesn't mean that we're going there, and so we want to hold off of the potential gap fill where it wants to climb up, reject, and come down. If that's the case, then our 850s will expire worthless. If it gets up to that $9 between now and next Friday, we can roll those 850 calls out to $9 or out to $9.50 and slowly stay ahead of it. We won't be collecting a premium off of it because it's in the money and above $8.50, and we had to roll it out, and we rolled it to next Friday and next Friday and next Friday and next Friday. Then we're not collecting a premium. We're not technically getting a paycheck off of it, but it still lets us hold our shares and roll that out and stay slightly ahead of the price while not technically realizing it. We don't realize the profits until we sell the shares, but we get to watch the profit on the shares that we own go up, even if we don't sell our shares yet. So, we just stayed ahead of it. I had him roll from $8 to $8.50, and if we're somewhere north of $8.50 next week, we'll just roll those out again to the next Friday and the next Friday and the next Friday. We'll just keep doing that until it either recovers all the way to $11 or $12, $13. So long as it does it slowly, we can get ahead of it. If it snaps its fingers and goes, then it's very difficult to get ahead of it. So it's something to just be aware of and pay attention to, that I'll see it on like a Tuesday or a Wednesday happening and just send him a text that says, hey, roll that out. You don't have to wait till Friday. Roll that out. Get out ahead of it. Stay ahead of the price action. But we have recovered. We got back into what I think is at least sustainable pricing. This sub 300 was not a sustainable price 2 standard deviations away. We're back to sustainable pricing. It may try to come up and touch that gap and come back down and reject, or it may try to come up, touch that gap, and then fill it, or it may do none of those things and just track sideways. And either way, we've got puts sold, we've got calls sold, there's premiums there available for us to collect on Fridays, and if it goes slow enough, we can stay out ahead of it and collect premiums either on selling puts or selling calls. Something will pay, and something will lower the cost basis of what he paid originally, like $8.25 for the shares. We'll continue to chip away at that. And then as it comes up, if we get into, say, the $400 areas over like a month or 2 months, 3 months, we climb back up to $400, then on TSLL, we will be somewhere in, like, say, the $15, $16 range, and he will have 800 or 1,000 shares of Tesla, and he'll be able to sell those calls for, say, $1 or $2. That would be $800 or $1,600 every Friday that he is now able to write himself a paycheck for. And say, okay, now I just get to have $1,600 because I did the work here. And so that's Tesla. We'll continue to navigate that, continue to keep track of it, and see how it's moving, lower the cost basis, and be collecting shares or collecting premiums, and just slowly growing this, and just being cautious and careful of that gap somewhere between $9 and $11. So yeah, that's it. That's the video.